head of research at Reliance Securities, joins in to break down the auto sales numbers that are coming out tomorrow and what the street is penciling in. Mitul, we're going in with expectations that when it comes to two-wheelers, there's not going to be much of a recovery. That's largely on account of the fuel price cut. What is it that you're working with when it comes to two-wheeler sales for the month gone by?
So this month has a better prospect compared to month on month. Of course, this time for month of May will not compare YOY. YOY comparison is meaningless because last year base was completely impacted by COVID second wave. So we are finding growth in the range of 100, 200, 300% or even 400% in case of MHCV on a YOY basis, but it is kind of a misleading. Month-on-month improvement is more appropriate when this time we are expecting single-digit improvement across the counter, including two-wheeler, B2 passenger vehicle, CVs also. So two-wheeler will be benefited from the marriage season falling in the month. So since last 1.5 month, particularly Northern Belt has witnessed improvement as per our channel check, and their two-wheeler traction is improving. And of course, this after petrol diesel price cut, sentiment has turned slightly positive. Rural recovery is happening, and as we all know, two-wheeler is primarily again rural product. So rural recovery can be seen in the tractor number where we expect strong outperformance. Probably after wheat export ban, street expected that there would be negative sentiment and growth on a low base could be just 15-20% kind of a number. But we are expecting tractor industry to report a very strong growth of 35-40%, which will give a positive surprise. At the same time, it will also indicate there is an improvement in the rural side also. So these two things should support two-wheeler as well as tractor sales. On the passenger vehicle side, semiconductor constraint still remains, but there seems to be improvement on a month-on-month basis. Relatively this month for Maruti Mahindra, everyone, it should be a single-digit improvement. And of course for Mahindra, with a very strong order book and a strong response for new products, it's going to be a very healthy SUV sales for next few months. And lastly, on the CV side, also we expect month-on-month improvement for MHCVs as well as MHLCV. Ashok Leyland should be benefited from this.
Right. Mitul, so wondering, especially, given your commentary and in the backdrop of M&M just announcing its numbers yesterday and the kind of solid commentary that they set out, where is it that you're parking your upgrades now within Motown?
Yeah, we remained very bullish on Mahindra since last 2-3 months, and moreover, this April and May months tractor volumes are giving very big positive surprise. Additionally, in yesterday's commentary of management on the order book as well as their margin improvement likely going ahead with particularly auto segment has witnessed sequential improvement in margin. Though tractors margins were under pressure, but we have been watching out for the auto margin since long, which didn't happen in past many years. But this time it seems that with such a strong response for the product, company will be able to command pricing power on the entire SUV portfolio going forward, and margin should be 7% upwards in second half of FY23. So we remain positive, and it is one of our top pick. We maintain our buy recommendation with a target price of 1180 on the stock.
Okay, Mitul, so that's what coming in on M&M. A target price of 1180 is what you are putting your target as. But for the overall sector, would you say that it is out of the woods? Because there were a lot of headwinds that we were talking about at the start of the year. Do you see a bit of reversal of trend? And do you expect the sector to outperform this year?
See, you pointed out very rightly, this sector should remain in a limelight, and it probably would be one of the most preferred sector. We would say one should go overweight on auto sector, considering demand is slowly recovering. Rural recovery is also seen in particularly PV as well as two-wheeler. Both has a nearly 40-50% contribution coming from rural. And biggest tailwind is that commodity price is softening, which was not expected few days back, but this is coming down sizably, and where these people will be benefited because in this Q4 result and expected Q1 result, raw material by sales ratio has gone up significantly for every player, which we expect to soften and normalize in second half. So second half should be again purely a period wherein we'll see volume recovery, pricing power coming back, as well as margin recovery because of the lower RM prices. So all those things should play out. And one important thing that after this price correction, many stocks are now trading close to their historical average or even lower than that. Few quality mid caps are trading even below their historical average. So there is a chances of earning upgrade in going forward, as well as valuation re-rating for a few select companies.
So we'll let you go on that note. Thank you so much for joining us and talking to us about how the auto sector is panning out and which of the names are likely to outperform.